Hi, everyone, and welcome back to another episode of Unlocking Venture Capital. I'm here with my dear friend Shaun Gold. How are you doing today, Shaun?
I'm doing good. Thank you for having me. It's so exciting to be here. I've seen this podcast so many times, and now I'm here. I'm kind of starstruck.
Yay! So, Shaun is the GP of a joint venture between Improve Ventures and Point Capital, and he brings the fun in fund. And he really is the most fun person in the industry. So, I am
Oh,
super
wow.
excited about this.
Let me go update my LinkedIn right now. I put the fun in fun and I put the adventure in venture. So I hope that we're starting off on a high note so that everyone comes away, if not a little educated, but a whole lot entertained.
Absolutely. And, Sean has come such an extensive background from the entertainment industry, going into venture, being an entrepreneur his whole life. And so would love to like learn about, what kind of life lessons you have as a new GP right now for this very unique fund. And we're going to talk about more of the structure of your fund as well as the focus.
Wow, I should have prepared for this. So essentially, for those looking to get into venture capital or any industry right now, especially startups, technology, whatever that may be, the network is the most important part. Everyone gets it wrong. It's not what you know, it's who you know. And that's wrong. It's who knows you.
Yeah.
Okay. You have to come to mind of someone when they're busy doing something that they either don't want to do or that they're not the right fit for, but they remember you and they want to just say, I know the person for this, and they make it a warm introduction, a connection. I come from spending almost 2 decades in Miami nightlife, so my entire I don't have a career, but let's say hypothetically, let's call it that. Um, the career was all about connecting. I never spent any money on ads. I never paid anyone to promote anything. It was always people had my number. I serviced my clients. They gave my number out, and it was just kind of everything was inbound. There was no cold outreach. There was none of that. And the same thing kind of applies to venture. I mean, it's you're going to have a lot easier of a time, whether it's raising capital, whether it's trying to get work in venture, whether it's just getting someone to answer an email. If you actually know the person or you
Yeah.
get introduced by a trusted individual to that person, so it's more informal. And I think that's really what, people should focus on.
Yeah.
But I feel like it's the hardest thing because people, especially if you're a founder, if you're looking for a job, you're essentially just going to be trying to collect cards and annoy people, and that's not the way to go. It
Yeah.
definitely
No,
isn't.
absolutely. Because it's not about like the breadth. It really is about how you're categorizing them in your mind and how your value, the value prop map is in theirs to you. And so understanding that it's a whole other thing in itself. And it's something you never learn from school. Was there a particular
No.
moment when it struck you when you're like, oh, I'm really good at this and like
For
I got to level
venture
up on this skill?
or for nightlife, which one? Because
Oh,
nightlife,
just
yes.
being a connector because it
Oh,
is
connector,
so yeah,
yeah.
it is the skill set
Um,
that you were able to translate into both industries.
yeah. I mean, it was so nightlife by like day two, it hit me when I was doing my very first parties in the
Oh,
Bahamas for spring break. I mean, this was like I
I
was
remember we talked about that.
yeah, incredibly good at it, and I just said I'm going to take a chance on myself and do that. As usual, everyone thought I was crazy, but they were wrong and I was right. No surprise there. But yeah, as I expanded from just like nightclubs and lounges and whatnot, it did hit me that the people that I had in my network, whether they were celebrities or whether they were high net worth individuals, whether they were startup founders or VCs or wealth managers, whatever the case may be, it is a small world, right? And there's a way to break out of that and use that to your advantage for whatever it is you want to do.
Hmm.
So the nightlife aspect also prepared me for being a connector just because it's second nature. I mean, people get like very weird if they don't know how to do it. And it's not hard. They're like, oh, I have to come up with a way to introduce you in a way that will make you look good, but will also make me look good. And I was like, or you can just say, hey, meet my friend. He's doing something in this space and you should have a chat with him. It's very simple. I mean,
Yeah.
it's so second nature to me because I've been doing it my whole life and just the way my mind works of when I meet someone, I know what they do and I like them. Because that's a big thing too. You have to actually like them.
Yeah.
And I meet
Hopefully.
yeah, exactly. And I meet someone else that I like. It's not an issue. I mean, I do it every day. I just make introductions all the time. I don't expect anything out of it. If something cool happens, then something cool happens. But again, there's a lot of people that try to make a business out of it, where it's like, my network has value, which is why you're going to pay me X amount. And I was like, great, it's awesome. Let me just pay you to introduce me to strangers that probably don't want to meet with me because they know what you're doing.
Yeah, and
Um,
actually, I have seen that where people are monetizing their communities in that way and being like, okay, well, my network has value, and they also each have $100. Therefore, these are the like the common denominators, between the members that you're being connected to, and so that is very interesting in how that's coming about in terms of the trend. But would love to switch gears and learn a little bit more about what your fund is focused on. I know that, you guys are a great specialty and leader in the secondary market, and that you have been an entrepreneur for a very long time. So, how have you come to embrace the secondary market space, and what are you seeing today that you haven't seen in the past?
Yep. So our fund focuses just on emerging markets, right? And mergers and acquisitions.
Mhm.
But me as an individual, I mean, I'm the content backbone for a lot of different things, for
Yeah.
OpenVC, for thought leadership on LinkedIn, for ghostwriting books and white papers and whatnot. So one of my clients at the start of this year was doing a book on secondaries and needed help. So I helped them write the book, mostly proofing it and improving the flow and whatnot. And it turns out he's been in VC for 30 plus years. Been in the secondary market before there was really secondaries. And then we started talking about, again, the connectivity comes in because I was like, well, you should meet my partner and then you should also meet this person. And we just started thinking that there's a way for us to partner and essentially be what we are calling a fundless sponsor, where there's no assets under management. We're
Mm.
not raising LP money. We're not raising outside capital. What we are doing is we're sourcing deals, and within these deals, we're looking to SPVs
Okay.
of no less than 10 million, right?
Okay.
Individual companies, we will look at. Earlier this year, we did some secondary deals and some very, I don't mention the names, but some very highly valued Series B and above AI
Oh,
companies
nice. Okay.
that we did as kind of like a proof of concept on our end. So we saw that the like market is there. And then we decided to essentially, again, being a funnel sponsor, we put together an SPV. We were doing, a lot of deal flow. And if it's not an individual company that's a Series B or above, it is also, we're looking into doing a strip sale, which is essentially buying up strips of GP LP stakes in their fund. A lot of
Oh,
people don't realize this, but the opportunity that we see is right now for secondaries is here because the distributions are small.
yeah.
Everybody's a gangster, right?
Yeah.
I'm a VC, and here's my thought leadership, and a CTO means Chief Technology Officer. Follow me for more insights, right? Like, by the end of the day, um, you know, last year, 2023 distributions was 5.1% of net asset value managed by US VC firms. It was 30% in 2021.
Mm.
Also last year, total volume of the secondary market reached 106.33 billion. How many L's is that? Just making sure you're paying
Yeah.
attention. No, I know you
Right?
got it. So essentially what's happening is that we have a lot of VC funds, and because VCs won't ever admit to being wrong or not knowing anything, they don't want to promote on their social media that, hey, we're essentially a zombie fund, which means that they're a shuffling, brainless creature that that can't do anything because they can't deploy capital because the capital's been deployed, and they can't
Yeah.
raise more capital because the capital they raised, their investors, their LPs are like, well, where's my exit? It was right
Right.
here. It was right here a minute ago. And a lot of people, especially during like the venture boom of 2021, and everybody kind of like put money into funds, and
Mhm.
all these funds opened up, and people started, investing in all these companies and all that. But the IPO market is essentially dead. So everyone's just sitting there, and eventually some of these investors are going to want to, I don't know, buy something, or have something to show for putting money into a fund or putting
Yeah.
money into a startup. So, we're looking for deals that fit our structure. And again, like fund size has to be, above 10 million. We aren't looking for companies that are just out for a cash grab. They have to be
Yeah.
healthy companies. They have to actually have really good investors on the cap table.
Yeah.
It really just, again, people are like, all right, I want to sell some of my stake because I want to buy a house or I want to
Mhm.
go to Europe or, I just want something to show. So, it's there. It's growing. I mean, just less than a month ago, General Catalyst announced $1 billion continuation fund. I think that the winds have shifted. Now that the election is over, people are thinking that, oh, no, it's going to be awesome. There's going to be IPOs every week. And there isn't. Yes, there's going to be, some have already started filing, but like, it's
Right.
not like it's going to be like every single week is a new IPO. So a lot of people, especially in like name brand startups, want liquidity. Like
Yeah.
SpaceX, everybody wants liquidity. If you have SpaceX, it's been around for over 20 years, you know, super highly valued, one of the most highly valued companies in the world. Okay, but you got nothing to show for it except bragging rights, and it looks cool on LinkedIn and on your Twitter account. But at the end of the day, if I could really have some of that money, I could probably, I don't know, use it for something.
Yeah.
So,
Yeah.
yeah, it's there. I mean,
That's so interesting.
yeah, Stripe's another one.
Yes.
Canva did it earlier this year. They did like, I forget, I forget the exact amount, but it's several billion or more in secondaries. I
Mm.
mean, it's there needs to be liquidity and people want to sell shares. And it used to be that secondaries was like a taboo thing.
Right. That's what I
Okay.
wanted to touch on. It
It
was a
was
very hush hush. Like, how do you make a business out of something that was so hush hush for so long?
Yeah, because I mean, it was very like, oh, well, if your company is going to be the next Google, why are you selling
Why would you
$300
leave? Yeah.
million
Why are you
dollars
giving up
of,
ownership?
yeah, why are you giving up all that when your IPO is going to make you, 20 billion worth $20 billion? Why are you doing it? Something must
Right.
be suspect, so, but now everyone's kind of like, oh, wait, secondaries? Let me take a look. Oh, wait, and there's really like, no rule that says you can't, right? And it used to be
Right.
taboo. And it's like Adam Newman sold $700 million of secondaries, kind of frowned upon, but there's no rule that says, just
During
like
COVID.
there's
Yeah.
there's no rule that says a dog can't play basketball, which is why we love Disney's Air Bud. Nothing in the rule book. Dogs can play
Literally.
any sport.
Yeah.
So yeah, it's but I mean, critics were like, "Why are you cashing out?" And well, they should have been because he turned out to be the worst investment for anyone. But it also has the risk that, okay, well, if you're selling this much and you're making yourself rich, like what's your motivation to keep building? What's your motivation to take this to a Series D, to an IPO, to grow it over the years? But now, I mean, again, just because it's just there's no liquidity. All that hesitation
Yeah.
has moved away because people get it. Fund managers, GPs get it. LPs definitely get it. Founders get it. We haven't had anyone actually pass saying no, we don't want this because everybody wants liquidity. We've just had people that like we've gotten deals and our secondary investors because we work with secondary funds and whatnot. They just
Hmm.
don't like the deals, right? The
Yeah.
deals are either
Yeah.
too overvalued
Sure.
or it's this, like, for instance, we had one startup that was valued at like 16 billion and the valuation got cut in half to like 8 billion. Still good. But we had their employee number one wanted to offload like all of his shares. He wanted out. He hasn't worked with them in years. He built it out, and
Oh, he
he
doesn't
thought
work there anymore. That's why.
no, he
Okay.
wanted
That's
he
different.
yeah, he wanted out, but no, there's no information on the company.
Mm.
Nobody knew the exact value. He thought it was valued at like what it really was. We were looking into it and we don't think it was, and just nothing happened. But
Right.
it just it's so much nuance that goes into this. And you have to make sure that there's no stock transfer restrictions or they're manageable.
Right.
The financial information has to be available, or it has to be transparent. As I said, we're not looking for funds or startups that are desperate for financing events, right?
That, that's so interesting because that's like the founders would hold the most shares in private companies in general, right? And so when you're talking about like, okay, well, we want to make sure this is not exactly going to be in line with like a fundraising round in the same way. And you also can't do it during a fundraising round either. There are just so many restrictions when it comes to that. So how do you guys get to pick and choose the kinds of deals that you think are going to be worth your time? Because it's all going to be basically your sweat equity that's going into this as they don't give you upfront fees, right?
Yeah, I mean, essentially, we examine the company, we do our due diligence, right?
Mhm.
We've all been in the space for a while. I mean, not my partners have been in it much longer. Me, I'm just like, I know a guy who wants
I
to
know a
do it because he
guy.
reached out. Fine, check it out. And I'm kind of like, I source things that way. But
Yeah.
again, companies have to have meaningful revenue or growth, right? That's
Yeah.
it. Can't be a dead company. There's actually things happening for that company and that market. It's not, fighting the last war. It's not, trying to do something that no one cares about. But it's blockchain for butterflies. It's not going to happen, right? Leave us alone. Um, Companies that actually have, again, adequate cash reserves, they're not desperate for financing, transparent, no stock transfer, quality co-investors on the cap table. We also look at their cap tables to make sure that they have actual, real people on there. Who are these people? That's my uncle. Okay. Like, we want to have the actual nice names and funds and whatnot. The liquidity should be in the next 3 to 5 years. I mean, with secondaries, we're not looking, and the secondary investors are not looking for the unicorn, 100x return in 12 years. It's not like that. Here, it's like liquidity, if we get 3 to 5x in 3 to 5 years, it's pretty good,
Okay.
right? It's
Yeah.
something normal. Again, the minimum deal size is 10 million. We can go higher. We haven't seen that as of yet. We are looking into doing one or two strip sales or just back and forth. It's a long process.
Hmm.
And we just evaluate the risk. My partners are extremely good at evaluating the risk. We are also partnered with, OpenVC. OpenVC created OpenVC Liquid. So fund GPs and LPs can just sign up and, submit their information and we'll review it. So we have
Oh,
that as a pipeline. We have our networks as a pipeline.
yeah.
Again, I've yet to meet a single fund that or even like a late stage company that's like, no, I'm not interested. Every single one of them is interested in having some liquidity. Again, not selling everything, but in just having something to show for it. Because at the end of the day, after years of doing it, you want to be able to have more than just, the LinkedIn title
Yeah.
and have more than the bragging rights, as if bragging about it is so cool. It's like, I'm a VC. Okay, great. Something, or I'm a VC scout. Okay.
Because it's
So
true, like you brag more when it comes to staying until the exit, even though you desperately need the liquidity now for
well,
something,
yeah, and
you know?
it also depends on like the people because again, like VC land, social media land is just a very funny place,
It is.
right? It'll be like we've been proud backers of AI since we've been proud backers since its inception, and it'll be like Chad from Fund X, employee since 2023. Like someone that has like no idea, or that
Like you
that
just
has
got
no
there.
experience. It's like
Yeah.
we've been a supporter of OpenAI since its last fundraising round. It's been around since 2015. People
Right.
don't realize that. Like I just did a lecture at my alma mater, University of Miami, and I asked them. I said, like, all right, how long has ChatGPT been around? Like OpenAI, and like people like, these are grad students. I expect them to know at least a little bit of the information, seeing as they're studying the startups and AI companies
Yeah.
and whatnot.
And they're
And they're
probably
like,
using it every day
yeah, and
too.
they're using it to do their homework, so you should
Yeah.
know. And they were like, "Oh, it's been around for like 20 years." I was like, "No, that's Clippy. Okay, that's
Oh, I
that's the little
remember
Clippy.
Clippy.
Yeah, Clippy was my homeboy. He was the real Chat
Oh my
GPT.
gosh. Right.
But OpenAI has been around since 2015,
Yeah.
right? They didn't really get anything done until 2021. They
Mhm.
didn't become a thing until 7 year mark when ChatGPT became ubiquitous, and now there's like
Right.
a GPT for everything. So
Yes.
again, it's and there's people that want to like, oh yeah, we've been we've been investors since 2022 or 2023. We've been
Funny.
firm believers since the Series D round.
Yeah,
Like
exactly.
it's
You've
so
convinced
yeah,
us.
it's very funny, but at the end of the
Yeah.
day, I mean, the whole business is money, ones and zeros.
Hmm.
Yeah, it's great. You want to change the world, support founders, blah blah blah. It's ones and zeros, okay, and it's money, and
Yeah.
it's like you want to have money and something to show. And again, we are seeing it with a lot of late stage companies. People just either they
Yeah.
just want to exit out, not fully, but get some liquidity,
Yes.
and we have investors that want to have some exposure to these companies or these deals. So
Hmm.
it's still an evergreen market. I mean, people are doing it, but I think it's going to grow, and that's what the opportunity is that we're essentially banking on that. Even though the stock market's going to open up for IPOs and whatnot, there's still going to be a lot of funds that need
Yeah.
liquidity. There's still going to be a lot of founders that want liquidity. So that's what we're seeing. So yeah, it's the secondary play. I want to get a bunch of deals so I can change my title on my LinkedIn since we're talking about it. Secondary Shaun. Or I'm going to go with Skynet Shaun, but I might get a
Yeah.
cease and desist. But secondary Shaun's got a
There you
nice
go.
spring to it.
How many deals, because you guys have to work it from beginning to end, it's not
Mhm,
really like a traditional fund or an opportunity fund, right? So
mhm.
how many deals do you expect to do, let's say in the next year or like a given year? And then of those, how many are you expecting for it to be like partial sales of your ownership versus like full sale of an ownership, you know? And why do you think
Um,
that might?
it's it's tough to say because I mean some of these deals take like 5, 6 months,
Yeah.
like the back
Yeah,
and
yeah,
forth.
because they're large, they're a hefty size. I mean, 10
They're
million
they're
plus.
they're large deals, one, and two, some of the deals we get, especially for like these later stage companies, they come with like the this message will self-destruct after X amount of time, where it's like we don't have like, they give you like a week to get back to
Tell
them.
us now, yeah.
Yeah, and it's like, all right, well, everyone in our network that would participate in this deal is not going to look at it this week. I mean, it's not like, so there's a lot of that, but it takes months, right?
Yeah.
I'd hope we'd have several deals a year. I'd
Okay.
hope, it really depends on the deal, the how long it takes for us, how willing everyone is to be back and forth and cooperative. I
Yeah.
mean, I'm not going to call out any names, but again, we have VCs with the typical VC behavior that we had a great call and we send them an email and then it just don't reply. There's
Yeah.
no reply. And then I have to like text them and the text will go, and these are warm introductions, right? The text will take like a week to get replied. And of course, it's like, I just saw this. Oh, we're working on it. We'll get back to you. Like, how did you just see this? You have a phone. You get all the emails, text messages, WhatsApps, Telegram, Signal. I don't know, your Tinder account. You see all the notifications, but you just saw this text. Like,
Yeah.
I mean, so it makes no sense. And then yeah, I mean, we essentially, what was the second part of your question? Sorry, I got off
I
on
just
another
want, yeah, I want
tangent.
to know if it's going to be partial sale or full sale of ownership that
It's
you're
it's partial. Yeah, it's
always going to
it's
be
always
partial.
yeah,
Yeah.
it depends. I mean, but it's usually partial.
I
Because
think
nobody
that
wants to completely
you get
exit
more
out.
eyebrow raises if somebody is selling full ownership. Like, have you
Yeah,
had any cases where like the board might block that secondary sale because of what it might trigger in the media or something like that, depending on,
yeah, I think I mean, it's all partial. Just people
yeah.
want some exposure. I
Yeah.
mean, if you have, again, if you have 3 million for sale and you just want 500K or 600K and you want to, wrap that up into something or combine it with some other people in it, then yeah, I mean, we've seen that with the deals we did earlier this year, which it was again like small stakes from investors that just wanted liquidity, and we did it. That was kind
Yeah.
of like our proof of concept.
That's
Um,
interesting.
you
Okay.
know, and then for everyone at home that just all, exciting to do everything. We didn't raise any money for this. This is all,
Yeah, you don't have to raise
yeah,
any money for
we're
this.
we're,
That's
we're
amazing.
bootstrapping it. We're putting our own time into it to source deals. There's no salary. There's none of that. So if anyone wants to reach out and say, "I'd love to do this. How much are you paying?" It's the same that I'm getting, zero. So it's just something because again, there's a kind of like, oh, I can bring you a bazillion deals, but I'm not doing it for free. And it's like you probably can't because you'd probably use like a tool that we already using,
Mhm.
and we're already partnered with them. And we've also had, just because it's startup land. Startup land's always funny. We also had like another platform that like wanted to charge us to be on it. It's like we're not going to pay to be on a platform that nobody uses or that people
Yeah.
are going to come across for happenstance. Like it makes no sense. So there's always that. Yeah, there's always something. There's always something to sell that nobody needs and that nobody wants. And of course, going back to the beginning of our conversation for the network, where it's like, oh, I'm sure my 25,000 LinkedIn connections, including some of the top VCs, would be interested. And it's like, I checked your engagement. You don't even get one like per post. Okay. Like, what are you trying to do over here? You can't even have like your friend or your girlfriend click the like button. Like, come on, like seriously. So yeah, it's always fun. So I'm excited for it. I think it's definitely a cool space. And as you know, VC is always evolving, and every day is a new adventure. And then this is the secondary adventure. I put the adventure in venture.
That is true. And it is very exciting in terms of like where it's going next too. And so as IPO market starts opening up again, or it's, let's say it's expected to or speculated to, how do you think that's going to affect secondaries in the next year or two?
It's hard to say because I really would like to see it open up again, right?
Okay.
I don't think it's going to be like a deluge. I don't think it's going to be a race to the IPO market.
Mm,
And even if it was, IPOs are a nightmare. I attempted to do one years ago, and that was for a small cap offering. They're a nightmare. They take months and months and months to even do. They're expensive, and it's just annoying. You
yeah.
know, it's just an annoying. I mean, it's cool. Like I said, everybody wants to ring the bell. Everybody wants to get the fund and all that, but to actually do it, it's just very like annoying. So I don't know. I mean, I'm sure some really late stage companies are going to.
Mhm.
Um, but I think that again, for a lot of funds that have these like Series A and Series B companies in their portfolio and are just there, I think that there's always going to be a secondary play for that, especially if those companies are healthy. So yeah, it's going to be interesting. Like I said, I meet people every day. I'm always, networking because that's part of it. And it just, it feels good not to sell anything because we're on the buy side. So,
That's true.
that's it. You don't have to, we're trying to help you,
Yeah.
right? Like that's it. So, yeah, it's not something that's like, let me share my screen and show you why this is going to be the next great thing when it comes to AI and sushi. Ready? Here we go. It's only 70 slides. I'll go through it quick. Don't worry, I'll go through it quick. You
Oh my
know,
gosh. Yes.
yeah,
Your LinkedIn post of what kind of like random combinations of deals that you see is hilarious. It always
it's
makes my
true.
day.
I wish I could make it up. But every day is something new. You got to take the good with the bad. So it's always something, and it's always like the certain type of founders that come, and always a certain type of VCs. Also, it's I'm trying not to be like that. I'm trying to be as original as possible.
I think
Just
you're
because.
original because
Oh,
you're
thank you.
100% authentic.
Yeah, I am. I will tell someone straight on a call that no, I'm out, or no, I'm not interested, and just end the call. I
You
don't even
you would
care.
already be hanging up the phone just
Yeah,
like
I'm like,
in
no.
real time.
Yeah, and it's like I tell everyone, it's like sure, random connection on LinkedIn that we both breathe oxygen and happen to have an inkling of startups and VC. I'd love to get coffee with you. Like no, like why? Why would I want to like I don't know you. I didn't get introduced to you. Like I don't want to like spend an hour in traffic to go to some part of Miami just so that you can tell me you're running late and then have to spend an hour going back. Like it's not happening. So,
Right. Yeah, because
it's
you're too
always
busy
fun.
buying deals. So,
I'm too busy. That's what people don't get. It's that there's a mentality of like no one's so busy that they don't have 5 minutes to meet, and it's like
that's not.
it's not that we're busy. It's that the time is valuable, and I'd
Yeah.
rather spend my time doing something that's going to benefit me or the businesses I'm involved in, or even just for my mental health by staring at the clouds than meeting somebody random to pitch me AI for ravioli or a new coin. You see how Bitcoin is? Because there's always like I'll just throw it with this because we're on it because there's always like the Bitcoin regret crowd that was like I'd be a billionaire. I had 75,000 Bitcoin in 2012 and I sold them all. Like it's always something. I've never met someone that actually still has it and it's like that. Or if I have met them, they're still working like a menial job. It's usually this. It's usually like a busboy here in Miami or like a bouncer or someone saying talking about crypto. But I'm like, well,
Yeah.
if you're so rich, why don't you quit the worst job in the world? But like, there's always like the Bitcoin regret crowd, and
Yeah.
they always have their own like. I understand it now, which is why I'm launching my own coin. Like,
Yeah.
and that's why I want to talk to you because yeah, I would have been worth 75 bazillion dollars if I only
I
held
will
on to
never
it.
know what it's like to be a day in your shoes, but I do, but I am very happy that you always give me the opportunity to have a glimmer of
Of
light
course,
of what it's like to be, in Sean's shoes and see things through Sean's eyes. So I really
I try.
appreciate that.
Thank you.
And for everyone else, I also want to then thank you for joining us on another episode of Unlocking Venture Capital. Thank you so much, Sean, for coming on the show. I am so happy to see you always. And you always give me a burst of energy and you give everyone else a burst of knowledge.
Well, I try. That what a great testimonial, ladies and gentlemen. Sydney Wong.
Thank you. Have a good one.
Thank you.